Hello, everybody. Sorry about that. And a few little techie problems there. So we are started maybe 30 seconds or a minute later than usual. So welcome to the last live broadcast of the week. Let's just get the risk warning up. And what a week it has been. So we are 2 weeks away from when the UK is due to leave the EU, and of course we are nowhere near knowing exactly what's going on. But we've seen lots of volatility. We won't spend too much time talking about Brexit today. We talked about it a lot this week. I thought it was interesting yesterday that the pound didn't move that much. We had a lot of votes yesterday, but actually not that much movement. So it does feel as if, we had all the volatility the first part of the week and not much as the week went on. So normally we'll look at the major markets: oil, gold, euro, pound, stock market indices, see what's going on, see where they're ending the week, all of that really. So let's get started. Let's bring the trading platform over. Let's start with oil because it has pushed higher. I thought it might struggle up here, and I suppose you could say it has struggled, but we have seen it break out to fresh highs for the year, fresh recovery highs. There we go. So we last did this on Wednesday when it was trading just below 58. This is the daily chart, and 58 had been the highs. Early March got as high as 58.04. Late Feb 57.90. So 58 was panning out to be a real problem, but we have seen it push higher. It started pushing higher Wednesday afternoon. The high was 58.75, then 59 yesterday, and today 59.20. And it's reversed a bit. So it's still positive. What can you say? It's still positive. It's a market that's still going up. The recovery off those lows, December the 24th, is still going. So it's gone from 42.33 to 59. So we've seen that $17 move. So that's got to be almost a 40% rise, isn't it? Since the December lows, which as I keep saying, is a heck of a move. But it's still positive. It's still positive. I still think 60 is going to be a problem. I've been saying 58 to 60 to the sort of the highs from early November. I think I still think it's not going to go sailing through 60. So that's my position. I think it's not going to go sailing through 60. And of course, no one's right all the time. If it does go sailing through 60, I bet there are lots of stop losses above 60 that will get triggered, and we could see quite the surge. So it wouldn't surprise me if we saw a bit more back and forth here for the oil price. Let's see what happens. But I'm still expecting 60 to be a problem. I would still rather see a deeper sell-off, maybe to 52, and some support come in and the buyers to come back in then, rather than trying to continue to extend it up here. I suppose if you were trying to build a negative argument for this, it's very hard to do it based on what the price has done, because the price has hit its best level today since November the 13th. So that's a 3-month high. December, January, February, March, 4-month high, sorry. 4-month high. So the price action still very positive. I suppose if you were really had to put together a bear case based off the charts, you could say that we got bearish divergence. Here's the RSI. So 10-day RSI. I'm not a massive fan of oscillators. I much prefer looking at what the price is doing. But I think what is always worth noting is the idea of divergence. So the market hits a high, pushes higher still, but the oscillators have just about made a lower high. So that's known as bearish divergence. It can be a suggestion that the momentum is running out of steam. Okay, so the upside momentum is running out of steam. We had similar back here. If you look back here, so we had the oscillator. It didn't work this time around. The market pushed to a high in January, pushed a bit higher, third week of Jan. The oscillator was making lower highs, but the market did push higher. But the oscillator went on to make a lower high again. Eventually, the market did sell off a bit. So that's the only bearish thing we have at the moment. But it's it's broken higher again this week. What can you say? That trend is still up. Like I say, for me, the better trade, for me, the way I do things, would be a bit of a sell-off somewhere below, maybe a couple of dollars, $2 or $3 below where we are now. And maybe it looks a bit more interesting. I suppose if you wanted to be really aggressive here, if you absolutely had to buy oil today, I think the obvious place to have a stop loss is the other side of yesterday's low. Let me just make sure I'm on the right day. Yeah, so yesterday's low was 58.29. So for me, the closest I would want to stop is probably the other side of 58. Okay, so a 50, 60, 70 point stop loss, something like that. Let's flip this over to a short-term chart. There we go. So you can see yesterday, early morning yesterday, 11 o'clock. 11 o'clock yesterday afternoon, 3:30, spikes down to 58. So there is, in the really short term, a lot of support running from 58.25 through to about 58.50. Okay, so if you really wanted to put a trade on, that would be the area I'd be using as a reference for the stop. Someone's put in a question about risk while day trading. I'll talk. It's a good question. That we'll spend a bit of time at the end of today's session talking about that. So if you have any questions, just fire them into the YouTube channel, and I'll try and we'll go through and talk about them at the end. But that's interesting. Oh, still strong. I still think 60 is going to be a problem, but it has pushed out to a 4-month high today, and you can't argue with that trend. So for me, it's just how far does any correction go? Okay, so that's our oil price. So still looking pretty positive. Let's take a look at gold. Gold, it's been quite volatile, gold. We were saying just earlier this week, the market had looked really strong, pushed up to 1310 on Wednesday afternoon, and that was, of course, after that old support, the lows for the year. Let me flip this over to a daily. It will be a bit clearer. The lows for the year at 1275 had held in gold. It drifted off to 1280 about a week ago. This week we've seen it regain 1300. Big down day yesterday, but again recovering today. So for me, I think it's pretty much the same as he was saying on Wednesday. I think the logical direction for gold in the medium term is still up. Okay, so we've got this recovery that's been in place since August. We've had a fairly decent correction from 1345 down to 1280, pushed back above, big sell-off yesterday, recovering today. So for me, the target, assuming 1275 holds, the target is for a run back up towards 1350. Let's take a look on the hourlies and see if there's any levels. There we go. So again, I suppose for me, if an aggressive trade, if I was a buyer now, the closest I would want my stop loss is under yesterday's low again, around about 1292. Okay, so the market's 1302 at the moment. Okay, but I think we've broken the back of this correction. We've held above the lows for the year. We've moved higher, sold off a bit. Bang, 1290 was support back in March. So for me, if we saw it weaken back towards below 1300 this afternoon, we'd be expecting 1290 to hold again, and a run back up to 1310, 1312, break above there, and a target of the highs for the year so far. Simple, eh? Let's see if it actually pans out that way. But I think that for me, the important view, the one we've been talking about for ages now, is this recovery that's been going on since August in gold, and clearly that's still intact. So yeah, still positive. I think the price of gold. Let's take a look. What should we look at? Let's leave currencies to last, because we've looked at currencies a lot this week. Let's talk about stock markets. We'll look at the Nasdaq, but let's start off with the S&P. I did a trade on the S&P yesterday actually, and and it links into the question. I'm probably going to pronounce your name wrong. Egel asked first of all about managing risk day trading. So I ended up getting filled. I think it was after hours, because the US markets this week, they're opening at 1:30 and closing at 8 o'clock because their clocks have gone forward. So I ended up putting in an order to buy at 2807 or 2808. I can't remember. And it got filled about here, the little sell-off. Yeah, 2808, 2807. Got filled in a little sell-off yesterday, just after the close. I think Adobe had earnings out, and out-of-hours markets slipped off. So, and for me, I was looking to buy. I'd been looking to buy here and missed it about 10 to 7 yesterday. And for me, the most important question is, where do you put your stop loss? This is why I talk about support and resistance when we're looking at these markets, to think, well, where does my stop loss go? So the obvious place for me, because I thought the US stock market is still strong, was a stop loss under the low of the day before. Or I'm sorry, under the low. Hang on a second. No, under the low earlier on in the session. Okay, so we'd seen the market move as low as 2804. This is the S&P. It rallied, it came back. I missed the 28.07 at 7 o'clock, but I put an order in after it moved away to buy at 28.07, and it's moved back with a stop loss under the low for the day. And you see in the overnight market, it's been really lucky actually that it's worked out this way. It's been really strong in the overnight market. But the reason, so that's one way of managing risk. Think about where's your stop loss going to go. For me, the low of the day so far, but ideally the low of the previous day if I'm buying, because I want to give myself a bit of wiggle room. And in this example, when it comes to taking profits, I think there are lots of different ways we can come up with a strategy for taking profits. But for me, if I'm a buyer at 28.08, for example, and the low for the day is 28.04, my stop loss might go at 2800. Okay, so let's just walk through the maths in the head. I bought at 28.08. I put a stop loss in at 2800. My stop loss is 8 points away, okay, from where I got in. For me, the market has to move at least 1.5 times the stop loss distance in my favor for me to move my stop. Okay, so to walk through that, if I bought at 28.08 with a stop loss at 2800 down here somewhere, that's 8 points away. I want to have 1.5 times that. 1.5 times 8 is 12. So the market's got to move 12 points in my favor from 28.08. So when the market hit 28.20, now I've started moving my stop loss. Okay, so my stop loss is 8 points behind the highest the market has been. And I think it's only after you've been doing trading for a while that you understand how important this stuff is. Clearly it's one thing to look at a market and say, okay, well, the trend is clearly up. I want to be a buyer, blah, 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 all of that sort of stuff. But the really difficult thing is when a trade moves into profit, which is a good thing, obviously, is striking that balance between letting the profits run, trying to rack up as much profit as possible, and cutting, but then not giving too much profit back, if that makes sense. So for me, I have found almost a mechanical system like this. If my stop is X number of points away, only move it when the market has moved X plus 50% in my favor. That's not going to be right for everybody, but it's something I do as a hard and fast rule now. So then, and I'll just move the stop up as the market's moving. So I hope we have done, there are 3 episodes of a trading course that are up on our YouTube channel already. So if you have a look at the recorded videos afterwards, there are 3 episodes of this. I haven't yet started talking about risk on that course, but I am going to start talking about it. Okay. And actually, I should plug this for UK clients or for people who are in the UK. 2 weeks tomorrow, we haven't quite finalized the website yet, but 2 weeks tomorrow, we're doing a free trading seminar at a hotel in Heathrow. So it's completely free of charge. When the website's done, I'll put the link on here. But if you're interested in coming, just keep that free in your diary. And it will be a whole day talking about stuff like this. Clearly on these, quick sort of 25-minute sessions during the week, we have a whiz through the markets. Now and again, we'll talk about strategy, but it's a whole day on March the 30th talking about this. So I hope that's answered at least some of the question on stop losses and take profits. Let's go back to the market. So there's the S&P 500. It's been a really interesting week. So the S&P 500 is the broader US stock market. So it's made up of 500 stocks. The Dow is only 30 stocks. It has this week pushed out on Wednesday to fresh recovery highs. So it's the highest it's been just about since early December. And on the S&P, we are back to this massive barrier now. It really is break or bust time for the S&P. So 28.23 were the highs, October the 17th. 28.19, November the 7th. 28.14, beginning of December. So this whole 28.15 to, let's round it up, 28.30 area has been a real problem. So if these markets are going to turn down, we're here, but they're still strong. Okay, so that's the thing. At the moment, the trend is still strong. But, look, we have seen this month at least a bit of back and forth at these levels. Okay, so I think it's US stock markets are really interesting up here. But looking at the hourly charts, they're still strong. We're going into this afternoon. If the market opens where the overnight futures are indicating it's going to open, we're going to open pretty much on fresh highs for the year, just about. on the S&P. So these markets are strong, but I think it's interesting up here. So the levels I would watch going into this afternoon, if we see a sell-off, how does it perform near yesterday's lows? Okay, that's the S&P. Let's take a look at the Dow, then we'll look at the Nasdaq, then we'll look at the DAX. So here's the Dow. So the Dow again has, in the overnight market, moved to fresh highs for the year. Yes, it has. Okay. The lows from yesterday on the Dow, I'm really getting confused what the date is. It's the 15th. The lows from yesterday on the Dow are around about, actually, they're quite a long way away. Here's the low for yesterday on the Dow, 25,620. The market's currently 25,800. So if we saw the market come under some pressure this afternoon, let's watch how it performs if it does move back to the lows of the day. But these markets are still really positive. If we flip over to the daily on the Dow, and we're not at highs there. Sorry, I was talking rubbish. We're at the highest we've been since March on the Dow. Okay, but again, the levels to watch on the Dow, it's these old highs from up here. We've been looking at it for a while, 26,000 to 26,300. So I think in the weeks ahead, this could be a problem. In the short term, these markets are still strong. So let's see. Let's see what happens. And finally, the Nasdaq. Then we look at the DAX. I mean, the Nasdaq has gone. When we looked at it this week, I think it was just starting to nudge through, wasn't it? When we were looking at this on Wednesday, during Wednesday's session, which was the 13th. Is it the 13th? I really lost track of the days this week. I'm not sure what I'm doing. So the 13th, we were about here. It did push through. And again, we've just chopped around up here. But the NASDAQ is, there we go. So the NASDAQ has broken through those November highs at 72.30. We've not seen much progress since then, but it's arguably the strongest out of all the US stock market indices at the moment. But let's not be surprised if we see a bit more to and fro up here. You know, we've had 2 months of markets not quite going up in a straight line, but having a really strong performance. I think we could see a lot more buying and selling to and fro up at these levels because there have been problems. So for the NASDAQ going into this afternoon, you know, what are the levels to watch? Yesterday's lows again, I would suggest. So yesterday's lows for the NASDAQ, 14th of March, they were made late in the session actually, around about 72.30. Okay, the market is at 72.70. So again, let's see what happens if it comes under some pressure. You know, we did see a lot of interest to be a buyer at 72.30 to 72.40 yesterday. Let's see what happens today. Okay, so I think I think it could be maybe a bit of an inconclusive finish to the week for stock markets. But, you know, let's see what this afternoon brings. I think if they move back to yesterday's lows, it gets a bit more interesting. And finally, the DAX. I'm not quite sure what the DAX has done. I haven't watched it today, but let's have a quick look at the DAX. So the DAX has broken out to fresh highs for the year. Okay, so this is the daily chart on the DAX. And you can see these charts, when we look at these indices, they look pretty similar in terms of where we are. We are bumping up against the levels that were a real problem October, November last year. So again, in the short term, the DAX in particular, looking at this, is still strong. But let's just be wary that 11,700 through to 11,870 was a problem and a major problem last year, but still strong in the short term. If we flip it over to the hourly, you know, there's the move on the DAX over the last week. Okay, so we've moved higher, we've sold off a bit, we've held above. We were looking at this level, I think, earlier this week, the old 11,460 lows. It sold off, it held 11,480. A bit of a messy day yesterday, but it's gapped higher today and it has moved higher, dragged higher by those US markets. So again, for the DAX, you know, I think for a really from a short-term trading point of view, we do have a trend in place for a week now on the DAX. So, you know, from a trend following point of view, we want to be a buyer on weakness. It's just about, as ever, where does your stop loss go? So for me, an aggressive stop would be under the lows for today at 8 o'clock this morning at 11,578. The market is currently more than 100 points above that. So I probably wouldn't want to buy it here and put a stop loss down there. A more conservative stop loss underneath the lows from yesterday at around 11,535. So either way, for me, the trade in the DAX would be if it sold off from here. If it sells off back down to where it was first thing this morning, then it looks interesting. Up here for me, it's maybe a bit overextended. Maybe your approach is different, so we'll have different ways of doing it. But for me, I'd be looking for a move back to that trend and back towards the lows from yesterday. Right, we've done well there to not talk about Brexit at all, really. 20 minutes, but now let's get into the currencies. So I think I said earlier this week, I've said all this year, I do think the pound is going to be, for some people, the surprise performer this year. There's so much negative talk about it, but I think we have had all the drama for the pound 2.5 years ago when the UK voted to leave. Okay, we know what the markets know what the worst case scenario is. The worst case scenario is no deal. That's the worst case as far as markets are concerned. So anything that doesn't look like no deal is going to be, in theory, received well by the pound. And that's what we've seen, So at the moment, let's flip it over to a daily first of all. So we are, as we speak, I'm looking at the DAX. I'm looking at completely the wrong market. There we go. Let's bring up the pounds. So there we go. So on the daily chart, okay, we did see earlier this week on Wednesday, the pound against the dollar touch its best levels pretty much since June, July last year. Okay, so that was on Wednesday. We had that incredibly volatile start to the week. So we had the big move on Monday from 129.50 to 130, nearly 133. Then it sold off really heavily on Tuesday on the news from the Attorney General that Theresa May deal didn't change anything, blah, blah, blah. I remember saying earlier this week, well, maybe we'll see it claw its way back up. And we did see, and it's really got to move on Wednesday. And then yesterday, you can see just a complete lack of volatility. Yes, we had 3 votes yesterday, and it just basically just sat there. Okay, so not much in terms of volatility. For me, clearly, this is a bit of a problem. It did spike through these old highs, but 133.50 to 133.80 is a bit of a problem. Personally, I would still be looking for buying opportunities rather than to sell short. So for me, going into next week, I think the big levels to watch are the lows for this week. So 129.50 through to 130. If we see something that the market perceives as negative, if it sells off again really heavily, I'd be looking for the buying opportunity. At the moment, it's just a bit nothing, isn't it? I suppose if you really wanted to buy it, you could put a stop loss under yesterday's low, which has held again today. Let's just take a look at that. Here we go. Yesterday's low, about 20 past 10 yesterday, 132.06. So again, falling towards the 132 area. Buyers come back in. Today, 10 to 8, it's traded as low as 132.02. I mean, that's a good bounce. Actually, that's nearly an 80-point move off that level. So that again that is the TARDIS trade for the day. If we could go back in time, buying the test of yesterday's support was the good trade for the day. At the moment, it's in the middle, and I think after a week like we've had, it would not surprise me at all if today ends up being really boring because everyone's had enough of it. They're all going to go down the pub for a 2-hour lunch and try and finish early because it's Friday and we're just fed up with Brexit. So I don't think we'll see, famous last words, enormous amounts of volatility this afternoon. Okay, so but going into next week, short-term traders watch the 132 level. I think for the bigger swing moves, let's see what happens if it sells off again back towards 130. Okay, so let's see what happens. I'm sure there'll be plenty of chatter over the weekend about Brexit, and maybe some market moving stuff happens this weekend. Let's take a look at the euro. I did buy the euro yesterday. I was really reluctant to buy it, but I bought it just above 113 yesterday, and it went absolutely nowhere. It has moved a little bit higher, and it's come back pretty much to where I bought it. And I bought it because I sat there watching this trend all week, and I thought, why haven't I bought this yet? So I bought it with a stop loss under the low. So I bought there, stop loss under the low from the day before. Again, that same old approach, stop loss under the low. So stop loss below 112.60 or 112.70. So the trend for the euro has been up since last Thursday, since we saw it hit its worst level in 18 months or something against the dollar since last Thursday. And really for me, because it's been so boring this week, I think it's the same as when we were saying on Wednesday. You know, the euro keeps breaking below major levels. We had it in November last year. So we had it break below the August lows, and then it just turns around again. We don't get any follow through on the break. Yeah. And we saw last Thursday breaks below the level, and again, no follow through, turns around. So the knee jerk reaction is to sell the euro. Then over the next couple of weeks, we get a bounce in the euro. But it's really dull. There's just a real lack of volatility. For now, at least, for me, I think the levels to watch, the lows for yesterday, about 112.90. After that, that 112.70 area. Again, I think the risk is we'll have a really uneventful afternoon now, as everyone in Europe is a bit worn out by this week. But going into next week, let's see what happens where we are on Monday. If we get a bit of a correction today, do we see buyers come back in ahead of these old supports? Yeah, so it's pretty uneventful. But that trend since last Thursday, a week yesterday's European Central Bank decision is still up. And one last one, then I'll jump into the questions. Euro sterling. So the euro against the pound. If we strip the euro out of the equation, sorry, the dollar out of the equation. Let's take a look at that. So we look at massive volatility, but actually we're pretty much where we were at the end of February. Okay, so we've seen some really these are daily candles. So we've seen really big swings this week. So March the 11th, as high as 86.75. You can see it top left of my screen there, and as low as 84.70. So a 200-point move, pretty much a 200-point move the next day, and pretty much a 200-point move the day after. So plenty of day-to-day volatility, down, up, down, but no real direction. And again, I think well, maybe if you know, because euro sterling had been trapped in this range for since when, not quite 18 months, but a long time, with 86 as the floor. If you really wanted to buy euro against the pound, I think now could well be the perfect time. Famous last words, because we've had the move, it falling out of the range, but we've not had really that much follow through. So I think the aggressive trade, if you thought the euro weakness has been overdone, the pound strength has been overdone, the aggressive trade is to be a buyer at 85.37 with a stop loss under the lows for this week, the other side of 84.70, for example. Yeah, and maybe we will see this volatility for euro sterling die off and the market crawl its way back into the range from before. But it's got a bit more interesting, euro sterling, in recent days. We also have this bullish divergence thing. I talked at the beginning, I think when we were looking at oil, at this idea of divergence where the market does one thing, but the RSI does something else. Euro moves to a low late February, moves lower still in March, but the RSI is making higher lows. So again, this is known as bullish divergence, a suggestion that maybe the weakness, in this example, the trend, the weakness is running out of steam. Let's see. We'll come back to it next week and have a look at it. Okay, I think that's our normal markets done. I will try and answer any questions that have come in. Tesla. So someone's asking about Tesla, and then I am going to finish up for the week because I'm off to Cardiff to hopefully watch the glorious Welsh rugby team complete the Grand Slam. So let's have a quick look at Tesla. I think we did look at this during the week, didn't we? And if you look at that, that's Tesla. So for those of you not familiar with Tesla, the electric car company, that's the last 12 months pretty much. That is a dull chart. That's a market that's traded in a sideways range. It's tradable. When we see weakness much below 280, we want to be a buyer. When we see strength back up above 380, we want to be selling them. So there is the definite range in place for Tesla, and that hasn't changed. That has not changed. So at the moment, with it at 289, you could argue that trend is still down. Yeah, and you could argue the trend is still a bit down at 289. For me, if it sold off over the next couple of weeks and we see it trading at 260, it looks interesting. If it rallies and we see it trading at 360, it looks interesting to sell it. At the moment, it's not quite in the middle of the range, but it's not far off it. So I think it's one of these ones where, based on what it's done recently, you've got to be nimble. You've got to be, nailing it down here and then selling it up here. Doing a trade in the middle is even more of a coin flip than trading is normally, I think. So it's one of those ones. I think it's just it maybe needs to sell off a bit more from here, but if it comes back down to the 250s, 260s, it looks interesting. I think, I mean, clearly it's. I'm a big car fan, so I'm quite interested with what Tesla are doing. But I think it just needs to break out one way or the other. I think if we saw it slide much below 240, 250, then we could really see the Tesla share price under some pressure. But at the moment it is just banging around in that range it's been in pretty much since April 2017. So we're not far off 2 years into this range. If you bought 2 years ago, you're not losing money, but you're not making money either. So it's just a bit chop chop. And that's it. I think we've answered all the other questions, haven't we? Hopefully, I think I've done all the questions. So we'll wrap things up there. So don't forget, if you're in the UK and you want to come along to this trading seminar thing we're doing, which is completely free of charge. Someone's saying Tesla's 282 in the pre-market. Okay, that's interesting. Thanks for that. So it's sold off a bit today. Let's see what happens. Let's see if it comes under a bit more pressure. But I think maybe next week, if it's trading at 260 or something over the next couple of weeks, let's have a look at it then. So if you're free on Saturday the 30th of March and you want to come along to this thing we're doing, so it's a day run by me. We'll look at technical analysis, charts that work, risk management, what markets to trade, all of that sort of stuff. Hopefully the web page will be finished by Monday, so I can put the link to the web page on here. But just keep that free. If you want to open an account, find out more about the company, go to the website, Capital.com. Any questions after watching it? If you're watching the recorded version of this over the weekend, just leave us a question in the comments down below. I do check back. If you like the video, please click on the thumbs up because it's important for YouTube. So make sure you click on that. And that's it. Any other questions, feel free to drop me an email. Otherwise, we'll do this all on Monday. I think we could have a quiet afternoon after the excitement of this week. It wouldn't be surprising if there were some political briefings, political leaks at the weekend, so we could see maybe for the pound a bit of volatility in Sunday night Asian trade. But let's see where we are 12:30 on Monday when we come back to this. So have a good weekend and hopefully see you next week.